slide. So we are supported by the state of Idaho, by the Small Business Administration, and by Lewis Clark State College, and we're all about economic momentum. And another slide. Yeah, this slide is got to be my favorite. This is my country place. My husband and I are building our retirement home up about 80 miles from here in the mountains with lots and lots of snow, about 2 feet right now. And last weekend I spent my time staining the window trim, although that's the wrong class. That's not what we're going to be talking about today. Slide. We're going to be talking about Enterprise Assessment Simplified, and I know that you folks, the people that I'm talking to that I can't see out there, come from a lot of different backgrounds and different education levels, and as do the participants in our regular workshops. Little bit about my background. I almost majored in accounting in college, but instead got a degree in agribusiness and spent about 3 years working in ag lending. And then after starting my family, I changed to working for a small business here in town, and it seems like I did everything there from sales to the bookkeeping, and learned all about those paper ledgers and entered every invoice and saw it through the conversion to a computerized bookkeeping system before I moved on. But I do understand and have a lot of respect for paper bookkeeping systems. Here at the Small Business Development Center, I see a lot of people with bookkeeping problems and a total lack of understanding of money, financials, record keeping, that whole category that needs to be there to make your enterprise successful. So this class is about keeping score, and that's about records. You can think of the ball game the other week about the score, and imagine that there's even a lot of records associated with a game such as that. The accounting picture, kind of an overview real quickly. We're going to be talking more about that next week with Ken Hart. I'm going to talk a little bit about your chart of accounts. Fixed versus variable expenses, which has already been touched on, enterprise budgets, and of course making more money, which is a lot about what we're going to be using the records for. So slide into the next one. So who cares about financial reports and records? And Diane already mentioned the IRS. It's a big deal. They can put you out of business, and we don't want that. Other tax collectors, bankers, contractors, lawyers, consultants like me, accountants that can be very good advisors in addition to doing your taxes. But I recommend you work with a certified public accountant. I have worked with small business people and farmers and others who have not found a good accountant, and there's some people out there that absolutely know nothing who are able to help you do your taxes and can get you into more trouble than you want to be. Landlords, and then in the long run, if you want or need to sell your farm or business, those records can be a very good tool to help you get the most value out of your business. But the most important reason for these records and an understanding of the financial reports generated from them is for your decision making. And we're going to get into a little bit about some of those decisions in a few minutes. So let's slide here. So accounting reports tell several different stories. So the first one is the past. So your income and expense records, your profit and loss, is all about what happened last year, last month, last quarter. Another one tells the story of the present, and that is the balance sheet, and then we're going to be talking a lot about planning and cash flow coming up, and that is to help you predict the future, and that's for good decision making. Slide. So if your records are in great shape and up to date, your reports will help you with these kinds of decisions, and they'll do a good job of that. So do you have enough money in the bank to pay the bills? So I've worked with people who overdrew their bank accounts because somebody they paid a rent check to didn't get the rent check deposited fast enough, so it was the landlord's fault, right? Well, you know, you can get an instant view online of how much money is in your bank, but you need a good check register to know what checks you've written, what has gone through the bank, and whether there's money there to pay the bills. I have worked with a lot of small business people whose QuickBooks program says there is a huge negative balance in their checking account, and I say, how is that? Is the bank covering those checks for you? Oh no, it's just wrong. So we need your records and your bookkeeping system to show the correct amount. Another kind of decision, is it time to expand or shrink? Diane talked about growing more beans, and maybe financially that made sense, but of course your bookkeeping is not necessarily, at least the financial part of it, going to have that time information in there that is going to be important to you too. What your product mix is. Is it time to raise or lower your prices? And when we talk about marketing, we're going to be talking more about pricing too. How to improve profits, reduce taxes, maybe a business valuation. Those are things that can, those reports and records can be good to help you with that. Let's slide again. So if you have not kept up with your records and don't have everything in there, you're going to get poor reports, and you're not going to be able to use them for your decisions, or if you do use them for your decisions, they might take you in the wrong direction. There is help out there. You can hire bookkeepers. You can take your receipts and checkbooks to the accounting firm, and they'll put them together for you. A lot of people are doing it themselves. It is important to think about and make conscious decisions about how the books are being kept, and what the costs are and what the benefits are. You might find affordable workshops in your area for organizations such as ours with everything from QuickBooks to accounting. So if you haven't put good information in, you're not going to get good information out. And you need good information, again, for your decisions and your advisors. Slide. I'm going to mention a little bit next about accounting controls. You would not believe how common embezzlement is. Bookkeepers and spouses are are big ones. Sometimes soon-to-be ex-spouses have been known to take off with a lot of money from a business, sometimes causing the failure of the business. I recommend that you do not leave the accounting to one person, whether that is a trusted partner, employee, or spouse. You are putting things at risk if you do that. It needs to be a team effort. More than one person needs to understand what's going on. You need to be thinking about collecting money owed to you. If your accounting system, if your accounts receivable records are in good shape, you can confidently make that call to somebody that owes you money and work on getting it collected. Sometimes if you are pricing your products based on your accounting reports, you're going to be able to get better prices, and you're going to understand the good and the bad of the business. Slide. So I already talked a little bit about the cash method of accounting, and the business handbook also talks about cash being the simple system. I have a friend who does hair, and she uses a cash system. She doesn't have accounts receivable or payable, and she has one of those big checkbooks that provides the ledger right there in the checkbook to break down her expenses as she writes the checks. The accrual system is much better if you have any complexity to your business, and it is often required by the IRS. You cannot just switch back and forth from one system to the other because of the IRS. But it might be something to talk to your accountant about if you have been using the cash system. In QuickBooks, you just press the button, flip the switch, and you can get reports on a cash basis or an accrual basis. The accrual basis is going to include important non-cash business changes such as inventory. So for example, I talked to a client the other day whose income last year was just terrible, and she's like, sales are better than ever, expenses are down, why am I showing this huge loss? Well, she's using a cash system. She has not taken an actual inventory, and she has a much higher level of inventory at the end of this year than she did the previous year, so she's not getting good information out of her books because that's not being accounted for. Okay, let's go on to the next slide. This was meant to be a poll, but we didn't get it into the system quick enough, so I'm just going to ask you to think about this on yourself and to score yourself. You have a bookkeeper who takes care of the records. You struggle to keep up with what is needed for bill paying and taxes. Or number 3, you put it in the computer but can't use what you get out. Number 4, I keep up with what is needed for bill paying and taxes and understand the reports. Or number 5, I keep detailed, timely records and use the excellent information in the reports for decision making. Now the goal here, I'll give you a second to swallow and think about where you might put yourself. The goal is to have everything entered, whether it's paper, whether it's computer spreadsheets, whether it's a program like QuickBooks or some other system. You want to have your numbers entered, your accounts payable paid, and everything reviewed by the 15th of the month, the following month. So you're going to have, like at this month, you would have all of January's books done and posted by the 15th of the month, and have a report created that says how much money you made or lost in January, and a balance sheet to show how much money is in your checking account, whether there were inventory changes, those kinds of things. And that can be done every month on a paper system. With QuickBooks, it's relatively easier because you just go to the reports and print them out and check and make sure everything's right. So I spent about 20 years working in a business where somebody else did all the accounting and generated the reports, and as the manager of that department, then I reviewed, in fact, I had a different report for each enterprise that would come to me, and I could examine and make sure that they were relatively correct. And once in a while you'd get something that says, oh, there's a negative balance in this bank account. And so somebody had to go trace that back and find what happened, what got miscoded, got put in the wrong place that caused that to happen. And I used those reports for decision making, and then of course we got audited every year, and one time we did put a great big bill in the wrong enterprise, and that resulted in audit troubles. Okay, so let's move on to the next item.